Look at your screen right now. If you are honest with yourself, you will admit that you are trapped in a cycle of silent desperation. You have spent months, perhaps years, searching for a secret code in the charts. You stay up late, your eyes bloodshot, staring at the flashing red and green lights. You watch your hard-earned capital slowly melt away, one emotional decision at a time. You have told everyone that you are a trader. You have built an entire identity around this pursuit. Yet, when the room grows cold and the market closes, you are left staring at a ledger that tells an entirely different story. The losses do not just hurt your bank account, they crush your soul. You sit in absolute silence, wondering if you are simply not intelligent enough. You watch strangers online turn small amounts into fortunes, and a toxic thought takes root in your mind. Maybe I am not built for this, but you are wrong. The market is not rejecting you. The market does not care about your dreams. Why? Our debts or your ego? The market is merely a mirror. It is reflecting your exact level of impatience. It is exposing your lack of discipline. It is punishing your inability to sit still. You do not have a technical strategy problem. You have a behavioral problem. You know exactly where support is. You know where resistance lies. You know what a clean breakout looks like. Yet, when real money is on the line and the candle starts moving fast, your logic completely evaporates. Fear enters the room. Greed whispers in your ear. The market did not press the button. You did. You chose to risk too much. You chose to enter early. Until you accept this absolute truth, no indicator, no signal, and no magical system will save you. Every profitable trader you see online did not find a secret strategy. They simply survived two brutal psychological stages that you are currently failing. Phase 2. The harsh truth: the financial market is a slaughterhouse designed to separate the undisciplined crowd from their wealth. To survive it, you must understand the first brutal stage that the legendary Jesse Livermore discovered over a century ago: the stage of absolute illusion. The beginner arrives at the chart looking for constant action. They treat the market like a digital casino. They believe that being highly active means being highly productive. They open a low time frame chart, see a single 5-minute candle surge upward, and immediately call it an opportunity. They cannot stand the thought of a flat day. To them, a day without a trade is a wasted day. They need the market to entertain them. They mistake rapid movement for market structure. But noise is not structure. Volatility is not an edge. Jesse Livermore operated on a completely different plane of reality. He realized that the big money is never made in the frantic buying and selling. The big money is made in the sitting. It is made by doing absolutely nothing until the market reveals its true intentions. The market does not reward activity. It rewards accuracy. The crowd fails because they are blind to the macro picture. They are caught in the noise of the smaller time frames, reacting to every tick, every headline, and every minor price fluctuation. They are completely consumed by the immediate present. The elite trader steps back. They completely ignore the lower time frames. They look exclusively at the daily chart. They look at the weekly chart. They observe the market geometry from a distance. They look for the line of least resistance, the powerful macro path that price naturally follows once all the temporary noise is stripped away. They map out historical pivot points and wait. They understand that true, high-probability setups are incredibly rare. They do not happen every hour, or even every single day. Doing nothing is the hardest position to hold in trading. It requires an extraordinary amount of emotional maturity. It requires you to watch a stock explode in value without you, and calmly say, that was not my setup, without feeling a single ounce of regret. An amateur cannot bear this silence. They need the market to feed their ego. But the market is an executioner of ego. It rewards the rare individual who can sit in total isolation while everyone else is chasing noise. You must survive the illusion of movement before you can ever hope to see real structure. Phase 3. The blueprint of ruin. When you fail to survive the first stage, you walk directly into the second brutal phase, the stage of self-destruction. This is the exact phase where 90% of traders permanently destroy their financial futures. It never happens all at once. It is a slow, methodical, self-inflicted bleeding. It is a death by 1,000 small emotional compromises. It always begins with that fatal whisper behind a closed screen. Just this once. Just this once. I will enter without confirmation. Just this once. I will move my stop loss back just a few pips to give the trade room to breathe. Just take. His once. I will double my risk because this setup looks absolutely perfect. Just this once. I will trade without a plan because I am bored. But in the unforgiving environment of the market, just this once becomes your permanent identity. The moment you break a written rule and accidentally make a profit, your brain registers a catastrophic lesson. It learns that undisciplined behavior can create quick wealth. Your ego explodes. You feel completely invincible. You think you have finally cracked the secret code. Then, the market turns. You enter an oversized position based on pure emotion. Price immediately moves against you. Instead of accepting a small, pre-planned professional loss, your ego freezes. You cannot bear the thought of being wrong. You cannot accept losing that specific amount of capital. So, you move your protective stop loss. You tell yourself the market is just testing the level. Price drops further, cutting deeper into your life savings. Panic sets in. Your palms sob. Wheat. Your chest grows incredibly tight. Now, you are no longer a trader. You are a hostage to hope. You pray to the screen. You look for any random piece of news to justify holding a dying position. Finally, the loss becomes so massive and the pain so completely unbearable that you capitulate. You close the trade at the absolute worst possible moment, wiping out weeks of hard-earned gains in a single afternoon. The emotional damage of that massive loss completely destabilizes your mind. You are filled with a toxic mixture of intense anger, deep shame, and a desperate need for immediate redemption. This is the exact moment revenge trading takes full control of your actions. You do not step away. You do not close the laptop. Instead, you immediately open a new chart. You do not look for a valid SEP. You do not care about higher time frame alignment or the line of least resistance. You just want your money back, and you want it right now. You enter a massive trade in the opposite direction. Ion. You scale up your risk out of pure spite. You are actively fighting the market, trying to force it to submit to your will, but the market has no consciousness. It does not care that you have bills to pay. It does not care that you promised yourself this would be the month you finally became independent. The market simply moves along the path of macro liquidity. By fighting it with an unstable mind, you are bringing absolute desperation to a place that strictly rewards calculation. You lose the revenge trade, you lose the next one. Within a matter of hours, your entire account is completely incinerated. You close the laptop, put your head in your hands, and realize that you have completely betrayed yourself yet again. Phase 4. The professional paradigm. If you are truly tired of this endless cycle of emotional ruin, you must completely rebuild your foundation. You must implement the 4 pillars of professional capital survival to transition from an amateur gambler to a cold-blooded operator. Pillar 1. Reduce your risk to quiet your emotions. The primary reason you panic, move stop losses, and cut winners early is very simple. Your position size is far too large for your current psychological capacity. When the money on the line is too heavy for your mind to handle, your primitive brain takes over. A normal, healthy pullback feels like an existential threat to your survival. You must drastically reduce your position size, cut it in half. Cut it by 75% if necessary. Trade a size so small that a consecutive string of 5 losses does not cause your heart rate to change by a single beat. Your absolute number 1 priority right now is not to get rich quickly. It is to stay alive long enough to actually learn how to trade. You must master consistency at a small scale before you earn the right to scale your risk. Pillar 2. Commit to one single system. Stop changing your strategy every single week. The amateur loses 2 trades in a row, decides the set is broken, and immediately opens a new tab to find a different indicator or a new mentor. After a year of this frantic jumping, they know a tiny bit about 20 different systems, but they have mastered absolutely nothing. Every single professional trading system on Earth has a built-in period of losses, known as a drawdown. Profitability does not mean never losing, it means executing an edge consistently enough that the wins outweigh the losses over a large sample size of 100 trades. Pick one clean method based on higher time frame market structure and stick to it blindly for 3 solid months. Gather the data, face the normal drawdowns, develop actual confidence born from repetition, not from short-term luck. Pillar 3. Journal your mind, not just the numbers. A standard trading journal that only records your entries, exits, and dollar amounts is completely useless if you are an emotional wreck. You must begin journaling your exact psychological state. Before you press the button, write down exactly how you feel. Are you completely calm? Are you bored? Are you entering out of an intense fear of missing a big move? Did you take this trade simply because you lost money an hour ago and want to recover it? When you write down your psychological state, you make it absolutely impossible to lie to yourself. Within 30 days, your journal will reveal a clear, undeniable pattern. It will show you that your strategy works perfectly fine when you are calm, but you lose 70% of your capital during hours, when you are impatient or revenge trading. Your behavior is the primary leak in your business. Fix the leak, or you will drown. Pillar 4. Define a crystal clear setup structure. If you cannot write down your exact trading setup on a single piece of paper so clearly that a child could understand it, you do not have a trading setup. You have a vague, dangerous idea. Before you even consider risking a single dollar, you must know exactly what the daily or week live market structure must look like. You must know the precise price level where your setup becomes completely invalid. You must know your exact target. If the market does not present every single one of your predefined structural criteria, you do not touch the keyboard. You sit out. You learn to value a flat day as an absolute victory of discipline over emotion. Phase 5. The silent transformation. When you finally implement these pillars, you survive the 2 brutal stages that destroy the crowd. A profound, quiet transformation takes place inside your mind. Something shifts permanently. You stop looking at the market as a source of high adrenaline entertainment or validation. You begin to look at it with the cold, detached eyes of an actuary, a casino owner, or a corporate risk manager. You completely stop caring about what the next single candle is going to do. You accept with absolute humility that you cannot control the future. You cannot control the next market news release, and you cannot control the immediate direction of the next tick. But you realize with immense clarity that you have absolute, total control over your risk management, your position sizing, your emotional discipline, and your willingness to follow your own written rules. You no longer experience a massive surge of dopamine when a trade hits your profit target. You no longer feel a wave of shame or anger when a trade hits your stop loss. A loss inside your defined system is no longer viewed as a personal failure. It is handled simply as a routine business expense, the necessary cost of doing business to reveal your statistical edge. A win is no longer an ego boost, it is merely the mechanical execution of a probability. You become quieter. You become vastly more selective. You look at the charts less frequently, focusing your energy on the higher time frames where the real capital moves along the line of least resistance. You watch the rest of the retail trading crowd panic, overtrade, scream end social media, and blow up their accounts chasing daily noise, and you feel absolutely no urge to join the chaos. You have become a genuinely dangerous participant in the market, not dangerous to the market itself, but incredibly dangerous to your old, emotional, undisciplined self. You finally understand that true profitability is not a magical destination you arrive at after discovering a secret chart pattern. Profitability is a continuous daily pattern of disciplined behavior. It is how you behave when you are in a winning streak. It is how you maintain your composure when you are in a normal drawdown. It is how you protect your capital when the market structure is completely unclear. It is your ability to follow your rules flawlessly when there is absolutely nobody around to watch or applaud your discipline. Take complete ownership of your screen right now. Strip away the excuses. Stop blaming the market algorithms, the unexpected news events, the manipulation of market makers, or the trading strategies you found online. Your current account balance is a direct, unfiltered reflection of your historical behavior. Your results are your responsibility. If you want your results to change, your behavior must change today. Shrink your position size, step up to the higher time frames, wait like a predator for your exact structural alignment, and start treating this game with the absolute respect it demands. Protect your capital. Trust the long-term process. Let the undisciplined crowd destroy themselves while you sit patiently in the shadows, waiting for your move.